So our next speaker is Professor Habib Ahmed. And Professor Ahmed is Sharia Chair at the Islamic Law and Finance, a Sharia Chair in Islamic Law and Finance at Durham University Business School, and a Fellow Honorary at the Cambridge Justice Business School, as well as a member of the Board of Trustees at the National Zakat Foundation Worldwide in the UK. He's taught at the University of Connecticut, National University of Singapore, the University of Bahrain. He worked as a visiting professor at Hamad bin Khalifa University in Qatar, and as well at the International Islamic University in Indonesia. Prior to joining Durham University in 2008, he worked at the National Commercial Bank and the Islamic Development Bank Group in Saudi Arabia. Professor Ahmed has also worked as a consultant with several international organizations such as the United Nations, the UNDP, the World Bank, the Islamic Development Bank Institute, Islamic Financial Services Board, ICD, COMCEC, and CBAT. He's also authored and edited more than 100 scholarly publications, which include articles written in international and refereed journals, books, and other academic papers. Professor Ahmed was awarded the ISDB Prize of Impact Achievement in Islamic Economics, which was the first prize, in 2022 for his contributions to applied research in Islamic economics and finance. Let's please welcome Professor Habib Ahmed.
Okay, Bismillah ar-Rahman ar-Rahim. Assalamu alaikum and good afternoon. Now I have a difficult task here. Two things. One, being one of the last speakers, a lot of things which I wanted to talk about have been discussed already. So it's going to be a challenge to come up with something new. But probably I'll provide a different perspective to some of the discussions which have taken place. And second thing, as Dr. Main was saying after lunch, it's probably nap time. So it will be a struggle for me and also for you to have the attention, actually. But at least I have some colorful slides for you. So let's start with the topic. Actually, when I communicated with Sister Randa, she told me I have half an hour, 20 minutes presentation, and 10 minutes Q&A. So I in some ways prepared it, keeping that in mind. I hope I can finish not in 20 or some minutes and have some time for Q&A. What I'll do is start with some basic principles of Islamic finance. I know most of you are aware of it, but as you'll see, I want to give it a different perspective and perspective of an Islamic economist. As we discussed, financial sector is in some ways a part of Islamic economy, and as Dr. Main said, economy itself is a part of the political economic system. And then in the second part of the lecture, I will cover some of the challenges in terms of the future and what kind of innovations the industry needs to face those challenges. Now, when we talk about economics and finance, the Islamic worldview, we think in terms of economics and financial system that is governed or based on Sharia and fiqh. I just want to make one point here. There's a difference between Sharia and fiqh, and I take this from Dr. Hussein Hamid Hassan, who actually distinguishes between Sharia and fiqh. I know there are different ways to define Sharia and fiqh, but his understanding of Sharia is that Sharia basically are the Sharia texts of Quran and Sunnah, and fiqh is what is derived from that. Now, most of the Islamic finance practice is based on fiqh in terms of what is derived from the principles and values of Sharia, which is basically Quran and Sunnah. So we have to understand this, that when we're talking about fiqh, we cannot forget the Sharia and the goals, values, principles, which are in some ways embedded in Sharia. Now, if we look at Sharia, one of the key driving principles of Sharia, and actually some scholars say that if you want to summarize Islamic law or Sharia in one sentence, it would be that Sharia is there to realize the human well-being of enhancing welfare, maslaha, and preventing harm. So the key approach to any Islamic legal issues should be that it should enhance the welfare or maslaha and minimize mafsada. And Sharia entails different legal principles and ethical values to achieve this maslaha. And these ethical values are guided, of course, by Quran and Sunnah itself, the texts. And then the Sharia scholars have extracted what we call the objectives of Sharia, the maqasid of Sharia, which I'll go over the next slide. And also, I think an important part from a legal theoretical perspective are the qawaid al-fiqh, or the legal maxims, which give us some principles which guide how we frame law and understand law. Now, the ethical foundations, and I think this is important because when we talk about Sharia compliance, we usually go to the legal compliance and sometimes forget the ethics. And the key point is that Sharia is both ethics and the legal rules. And unless we understand the ethics, it's sometimes difficult to understand the whole notion of what Sharia is about. Now, if you look at the ethics, we can distinguish it in different types. One relates to our behavior, ethical behavior, and Islamic economists, when they talk about ethical behavior, they distinguish between what we call homo economicus, a rational person whose objective is to maximize utility and maximize profit, and homo islamicus, who's driven by an Islamic worldview. And that one of the key differences being that humans, as Muslims actually, when they're making economic decisions, they're not only thinking of welfare in this world, but also the hereafter. So the other, of course, key feature of homo islamicus is that we are here as Khalifa, vicegerents, or trustees. The other issue about ethics is the maqasid al-Sharia. When we talk about maximization of maslaha, the essential maslaha are basically, in some ways, expressed in what we call the maqasid al-Sharia, the objectives of Sharia, which is basically protection of and enhancement of human-related features, which include faith, the self, intellect, posterity, wealth, and dignity. For economics, we also have maqasid, which are specifically relates to economic transactions. Ibn Ashur, in his book on maqasid, he identifies 5 maqasid which are directly related to economic transactions, and these are circulation, transparency, preservation, durability, and justice. So as you see, one of the key objectives of economics is justice, and among other things which have been mentioned here. And as I said, there are a lot of legal maxims, the qawaid al-fiqh, which directly relates to economic transactions. And in some ways, some of these legal maxims are actually legal in character, and others are ethical in nature. Well, one of the legal maxims that I think Dr. Main yesterday mentioned, that when it comes to contracts, it is the substance which is important, not the words and words itself. Similarly, we have maxims which relate to transactions which links risks to returns. For example, al-kharaj bid-daman and al-ghun bi-al-ghun, which basically says that when you are entitled to a profit if you take the risks of ownership of the asset which is used in economic transactions. The legal framework is actually very straightforward. It is based on the principles of permissibility, which basically says that everything is permissible except what is prohibited by Sharia. And if you look at this framework, an Islamic economy will be very straightforward. You avoid the prohibitions, and an economy without the prohibitions becomes an Islamic economy. And if you're looking at different sectors, you basically exclude the prohibited sectors like gambling and pork production, and so you exclude these prohibited kind of activities and goods. You have a halal economy. And similarly, in transactions, you avoid the 2 key prohibitions, which is riba and gharar, and then the transaction becomes Sharia compliant. So from a legal perspective, economy is very straightforward. You have a halal economy, and transactions there avoid riba and gharar. The question is this all we can think of in terms of Islamic economy? Probably not, because we have to incorporate the ethics into it, and then it gives you a much richer perspective of how an economic system and financial system would be. So if you look at these Islamic values, humans as vicegerents and trustees, the implication for this for the financial sector is you should promote sustainable finance, avoid misuse of resources, and preserve the environment. For example, the Islamic values of maqasid implies that you enhance financial inclusion, because when you're talking about enhancement and protection of property, it's not only for the few, but the whole society, people in the whole society. So the financial sector have to be inclusive and also be sustainable. And then the implication of justice has different implications. When you're talking about justice in contracts, this, of course, includes avoiding riba, which is unjust, and also gharar is also prohibited because of it creates the injustice, and providing social finance. And then we have justice in terms of the contracts itself, which links returns to risks. Here we're talking about, even though debt is permitted, it is not something which is in some ways ethically promoted. That's why we should think of using asset-based and equity-based modes of financing. So that is the theoretical perspective which we have been talking about. Actually, the Islamic economists, when they talked about an Islamic economy, this was the perspective they had. It's not only about legal, but also the maqasid perspective, which brings in the ethical values. But let's look at the practice itself. When it comes to practice, unfortunately, Sharia compliance has been interpreted in a very narrow way. It is focused on the form, not the substance. It has become a legal compliance, a prohibition-driven strategy. As I said, some of these have been already discussed. The innovation has been reverse engineering. You look at a conventional product, try to basically come up with a Islamic product. Incidentally, we have heard some products here in this conference, like preference shares and credit cards. These are conventional products. We want to make them Islamic. And then, of course, the key thing is the ethical issues which we see in the broader maqasid perspective. These have not been incorporated. And actually, we do have some evidence for this. This was a survey done by Sibafi a couple of years ago, 103 CEOs from different countries of Islamic banks. And they were asked what were their key concerns. And they were asked to rank the concerns in a Likert scale of 1 to 5. High 5 means they're very concerned, and low 1 means not very concerned. Now, of course, you see the first element, the numbers in the parentheses are basically the ranking. So for Islamic bank CEOs, the first concern is shareholders' value and expectations. And then Sharia compliance comes 8th in rank, as you see, 4.6. And financial inclusion, micro and SME financing is something which they do not care much about. It is ranked 18th in the list. We have heard from Brother Zubair about lack of financial inclusion. Islamic finance is only providing 5% of the total microfinance outreach. Most of the financing is debt-based. Actually, if you look at Mudaraba, Tabarruk, Salam, and Istisna, which are debt-based contracts, they're more than 70%. The others are other modes of financing. In some countries, as was mentioned before, like in Malaysia, I think 95 to 96% of the financing would be debt-based. And finally, the key thing which in some ways is the focus of my study, second part of the study, is the lack of innovation. As we said, the practice has been reverse engineering. You look at a conventional product and try to come up with an Islamic alternative for it. Now, there are some other studies. Again, these are some empirical studies on Islamic banking in terms of their social impact. These studies have, as you see, from different time periods, looked at different banks and empirically looked at the important thing for us is the one on the right-hand side, the social and environmental impact. most of these studies found that when it comes to Islamic banking, they are not too much worried about social and environmental impact. So their focus has been on Sharia compliance, but when it comes to the social, environmental issues which we talk about, when we talk about the ethics of Islamic finance, these studies show that Islamic banks have not been performing that well. So given this background, let's look at some challenges. Now, the future is going to be changing. I mean, it is changing right now. Most of the things which will shape the future, most of the countries have signed up to the SDGs, Sustainable Development Goals, and this has been incorporated in the national development plans of most countries. And then, of course, we have global uncertainties, and climate crisis is one of them. So the climate risks are going to become very, very prominent as we move in the future. We are living in the post-industrial revolution in terms of digital technology, and that is going to change the nature of the economy we live in as we speak. The other issue, of course, for us is important is the increasing debt levels. The debt levels globally has increased, and actually it has jumped more after COVID. The latest numbers show that the global debt levels is close to $300 trillion US, which is 3 times the total GDP of the global GDP. Now, there are some countries which are spending more to service debt than they spend on health and education in their budgets. So this, I think, is a serious problem. The other thing is the demographic changes. The younger generations, their preferences are different. They prefer more ESG kind of things, and this is a survey which was done by, I think, McKinsey. They basically had a survey of 10,000 millennials globally. And as you see, the blue one is what businesses should try to achieve. This is what the younger people prefer. And the orange or the amber color shows what the businesses are currently doing. So there is a gap in terms of what businesses are doing and what the younger people want in terms of they want businesses to improve society. They want businesses to improve and protect environment, whereas the focus of businesses are to generate profit and drive efficiency, which is important, but I think the key thing is that for them, the societal impact and also the environmental issues are important. So given this background in terms of the changing world, what are the challenges we can think of, and how should the financial sector react to it? So the challenges would include increased risk and uncertainty. Actually, we are living in a world of a lot of risks and uncertainty, which implies that the financial sector, they have to be resilient and adaptable to deal with this environment. And of course, the other thing is the focus should be on sustainable finance, because environmental risks will become a very important risk when they're making financial decisions, especially when we're talking about long-term investments. Increased inequalities and disparity. This implies that the financial sector, to deal with this problem, should be focusing on financial inclusion, including micro and small enterprise financing. As I said, some of these things have been discussed already. And then we have the increased debt and fragility which comes with debt. So that implies that they should be focused on reducing debt and increasing the share of asset and equity modes of financing. And finally, of course, technology is here to stay, and I think a lot of these problems can be solved by using technology in ways which the traditional financial institutions actually, I mean, a lot of things cannot be done by brick and mortar financial institutions. Technology can help achieving some of these objectives. So let's look at Islamic finance. There was actually a study which was published by this one on the right, ISDB and IFSB. As you see, this basically is an Islamic Financial Services Industry Development 10-year framework and strategies, and they did a final review of this. And one of the key things they identified in this review was, after looking at the industry, and what this sentence is taken from that report, the industry continues to face a critical challenge related to its identity. And I think this is a very important thing. if when you're talking about identity, as was again mentioned, I think, among others by Professor Kabir Hassan, that people don't know what's the difference between conventional and Islamic, and this itself can be a very, moving forward, this can create problems in terms of the growth of the industry. The other thing is, and this does not apply only to Islamic finance, it applies to all businesses, the financial sector. We're living in a very dynamic environment. Unless businesses and financial institutions, they innovate, it will be very difficult for them to survive. And I was just telling people that the competition is not, Islamic banks, they're not competing with conventional banks. They're competing now with big techs. They're competing with a lot of other players who are coming in with financial products. And if they do not, in some ways, innovate and come up with better services and products, in the long term, that will affect their growth. Now, last few slides on innovation. When we look at the dimensions of innovation, we can think in terms of the domain of innovation and the intensity and levels. In domains, there is some literature which talks about innovation of meaning. And I think it is very relevant for Islamic finance when it comes to innovation and meaning. And we'll have a slide on that. And then, of course, there's innovation in products and then innovation in organizational and business models. Now, when we talk about innovation, as we have seen some of the discussions here, we usually talk about products. But I think for Islamic finance, before we talk about products, meaning, innovation in meaning is probably more important. And as I said, I'll talk about it in the next slide. And the other thing is, if you look at the current innovations, they are about products, but more importantly, they are about business models and organizational structures. So if you're talking about fintech, fintech is the innovation of organizational structures. So when we talk about innovations of product only, without talking about innovations of meaning and organizational structures, sometimes I think we'll not be able to achieve those innovations unless we include the other two innovations. And the other thing is the innovation levels in terms of marginal and radical. Marginal innovation basically means there's no innovation. You're replicating things which already exist with some tweaks here and there. So innovation of meaning, actually, as I said, this is a literature. This literature is not on Islamic finance. This is a literature in innovation, and they are talking about that people, when they buy products, the products mean something to them. So it is, when they're buying product, the purpose of the product is perceived, why people use the product. Those are the questions we ask when we're talking about innovation and meaning. It is about values of products. When we talk about innovation, you usually think of value in terms of the price of the product, whether you can sell it at a lower price. But more important than that, it is the values in terms of the ethical values and other values which are embedded in the product, which are very important for consumers. And of course, this is very important for Islamic finance because there are religious connotations for Muslims when they're using Sharia-based products because they're fulfilling some religious obligations. So I think that is very important. Now, for products, the key issue here is when we're talking about Sharia compliance, what do we mean by Sharia compliance? Is it just legal compliance, as is in some ways practiced currently, that you fulfill the legal requirements in form, and that's all that is to, quote unquote, an Islamic financial product, or it should include ethics also. The difference would be that should it only be halal, or it should also be halal and tayyib, which it brings in a lot of other dimensions to the product. It should be wholesome, it should be good. As was mentioned, when you're looking at a halal chicken, you look at the supply chain also. How are the chicken fed? Are they fed chemicals and things like that? So when we're talking about product innovation, I think moving forward, given the environment, if we stick with the reverse engineering, we'll not go too far. What we need is innovative engineering. And basically, in terms of meaning, this means that we have to broaden the concept of Sharia compliance from just legal compliance and add ethical values into it, which would mean that if you bring in Maqasid perspective, you're talking about financial inclusion, environmental sustainability, among others. When you're talking about justice, your products will not be priced higher than conventional, for example. Actually, I was talking to somebody from Indonesia, and they said that some of the Islamic microfinance institutions, they're charging 50, 60% profit rate. Now it is a Sharia-compliant product, Murabaha, and you're charging 50, 60% profit rate. From a justice point of view, I think it has a problem, right? So if you don't bring in the ethics into the practice, we will really not be able to achieve these goals which we talked about. So by adding meaning, what we want to do is move from what we call Sharia-compliant products to Sharia-based products. Similarly, when you're talking about organizational innovation, unfortunately, as was discussed, 70% or 80% of the Islamic finance assets are in the banking sector. Now, banking is not an Islamic, it's not compatible with Islamic values and principles. If you look at banking, it has evolved over 300-400 years as a debt-based, interest-based organization and become very efficient. And then you want to do Islamic banking with this organizational structure. So I think moving forward, Islamic finance, it has to be come up with more innovative organizational structures. And I have listed here some non-bank financial institutions. There's some unique Islamic financial institutions like Mudaraba companies in Pakistan, Tabung Haji, and some other organizations. And the other thing is, I think we also have to think in terms of social enterprises, which mixes profit orientation and also social impact. So instead of just focusing on maximizing profit, you think of other stakeholders and also try to create some social impact. So I end my talk with this example of Akhwat as a unique example of Islamic financial organization. Basically, Akhwat, as was mentioned, I think, by someone, it is a microfinance institution which is in Pakistan. The fundamental premise of Akhwat is basically established partnership between more affluent and less affluent privileged citizens. They give interest-free loans to individuals with guarantee. So usually if you go to Akhwat, you need to have two guarantors because poor people, they do not have collateral to. And usually the interesting thing of this model is the transactions takes place in basically mosques and churches. So you are using the social capital of mosques and churches. I mean, if you are signing a contract in a mosque, I think you feel more obligated to pay it back. And then you have these two guarantors who are also praying with you. So you're basically using a social capital for this. And there's no charges on the loans. The operational costs are covered by donations. Now, the founder of this Akhwat, Dr. Amjad Saqib, when he talks about this model to different international organizations, I heard him saying that they told him that this model will not work. How can you basically have a model which your operational costs are coming from donations, you don't generate any revenue. So it doesn't make any sense from a conventional business model perspective. So what his answer is, okay, just look at the numbers. And these are the numbers. If you see it, December 2016, January 2019, and September, look at the amount disbursed. They doubled over the years, 3 years, every 3 years, the amount which is being disbursed has doubled. The recovery rate, as you see, is 99.9%. And the benefiting families, they have basically reached 5.5 million people in September 2022. Now, this is an example of radical innovation. And this innovation is of product because it's giving you Qard Hasan, and also, more importantly, it's an innovation of an organizational format. And I think this is the kind of institutions Islamic finance needs to serve different needs in the economy. So that is my last slide. I don't know if I have time for some questions. Just to conclude, ethics has to be included, and innovation is not only about products, organizations, and more importantly, the meaning. I think those are the key messages which I want to convey in this presentation.
Any questions? I actually have a question.
Yeah,
What
please.
is the range of the loan amounts that are made?
This one is, I think brothers from Pakistan probably can answer that better. 50,000 US dollars would be? No. In US dollars, how much is it?
500.
No.
Almost 150.
$150 is the max, right?
No. The lower. We have the Sharia advisor for approval. That is depend on what type of loan. For individual, that is mentioned higher. But for the small business, that is around $500 as well.
Okay. So 150 to $500. Yeah.
I just have a smaller question. In terms of innovations, like the possibility of, what is the possibility of doing innovations? The other is then the acceptance and the usability of those innovative products. In the practices, particularly in a few jurisdictions, like in Turkey and Pakistan, I saw like institutions are innovating, they are bringing ideas, but when it comes to the implementation, the acceptance of innovations in these very highly regulated institutions is very difficult task. Like when they have, say, 10 ideas, they reduce it to the conventional structure when it goes to the implementation. So is it part of the innovation, the acceptance of innovation is part of the innovation itself? What's your views on it?
No, I think there's a fundamental problem in the innovation which is taking place in Islamic finance. As you mentioned, most of it is reverse engineering. You're replicating conventional. And because the conventional has a different value system, so if you're trying to replicate a loan, you do murabaha, tawarruk, worse, bailina, and things like that to replicate it. I think these are marginal innovation. And the way to do innovation is take an entrepreneurial approach, which is what? You try to solve problems. You look at a need and try to fill that need, right? It is a very different perspective. Instead of just replicating conventional products, you look at the needs in the economy and what is the best solution to it, through which you can make money, or in case of akhwat, it's serving a purpose. So I think the approach has to be entrepreneurial, which is you look at it from a problem-solving perspective and come up with solutions which fulfill the values and principles of Sharia.
So whose approach you are referring to? I have a very simple example, a case study. Recently for the sukuk, in our working group, we received 10 innovations, like service sukuks, which were never developed before, and things like that. So all of the sukuk went to the processes. They were very innovative, new ideas. They were accepted theoretically. But when it came to the implementations into different departments, they say, okay, this would take us a year. We need to have it quickly. So let's reduce these innovation into these 3, 4, because they are doable in 3. So when those were accepted, then they were for another round. They thought, okay, let's ask all the stakeholders. So when they involve all the stakeholders, they reached to finally select one, which was in fact that mimicking. So
I think, again, let me just say, you're still focused on products, right? You're looking at sukuk. And I would say, if you're thinking of innovative solution, you can think in terms of the technology, how you can use the technology to come up with, for example, crypto assets, which can be used to finance small, medium enterprises. Now, sukuk cannot be issued by medium and small enterprises. It's for the large companies which already have access to finance. So for me, if to make value, don't think of the products. You have to think of the organizational structures. Think of, for example, actually I'm working on a crypto security token, how it can be used in a capital market structure so that the small and medium enterprises can also raise funds. So yeah, as you see, the thinking is very different. We're not thinking of products, we're thinking of a structure through which product comes in, but it has to be, as I said, go beyond the product and think of the organizational structures which suits that product, and of course, with it also the meaning becomes very important. Yeah. I hope I've answered your question.
yeah, it's a very good thought.
Because I think our idea of innovation is only products, and that's why your questions are all about products.
Yes, that's very logical.
Thank you very much.
Thank you.